You're watching Trade of the Week, and today we unpack Barloworld, British American Tobacco, Glencore and Mondi with Unum Capital's Loyiso Mpeta. Thank you so much for your time, Loyiso. I see that you're sticking to your trend of diversification because all these are in different sectors. And actually, just to start off the conversation, just give us an overview of what you've seen with these different charts, in terms of their performance compared to the broader market on the JC.
Yeah, so as I said at the beginning of the year, let's not go too far back, especially when you're looking at the diversified stocks. And so I'm looking at the performance starting from January last year to date and seeing how these four counters have performed relative to the all-share index. And we can see I have Barloworld, which has been the biggest underperformer, down 24%, followed by Glencore, down 19%, BTI coming in at minus 17%, the all-share down 2%, and the outperformer has been Mondi. And anyone who's been following the show since I started it about 3 years ago, I've always been bearish on Mondi. And I have a surprise today. For the first time, I'll actually be bullish.
Wow.
So running regressions and looking at the beta coefficients and the correlation of the returns relative to the all-share index, no surprise that Glencore has the highest beta coefficient as a commodity stock, coming in at 1.14, and the other three all below 1, making them low beta stocks. And from a correlation perspective, very good for diversification, as all of them have got a very, very weak correlation coefficient relative to the all-share index. So again, understanding the dynamic relationship in terms of beta coefficients from a volatility perspective, as well as correlation in terms of a return diversification perspective. So I think these four counters are all very good in terms of the correlation, so not correlated to the overall broader market.
Yeah, it's quite interesting looking at the divergence between Mondi and Barloworld, with Mondi being the biggest outperformer and Barloworld being the biggest underperformer, because they've both had this Russia business overhang since we, had the war starting. When was it? 2 years ago?
2 years ago, yeah.
Yeah, but also quite interesting to see how they both handled those those businesses, with Mondi completely getting out, and Barloworld is still sticking to it.
Yeah, sticking to it.
Yeah, exactly. And also just quite interesting to see, because Mondi is in a kind of cyclical sector, the paper market, but yeah, a lot of people basically thinking that Mondi is maybe less cyclical than SAPI. But yeah, let's go on to Barloworld. If we could just get the technical and the fundamental picture over there.
Yeah, so Barloworld, we actually did a recap of Barloworld around September last year. And I re-emphasized that from this peak in January 2022, I was looking at this broad sell-off as an A, B, C zigzag Elliott wave pattern. And within this C wave, I had said that the stock has already unfolded in the first 4 waves, and the 4th wave was forming a triangle. So I was forecasting one more push to the downside to complete the 5th wave of the higher degree wave C. And the stock has traded as forecasted, and we can see the stock is currently in a decline. But what makes me positive from a technical perspective is, from the wave count, we can see now that the stock is in the 5th wave of wave C, which is the 5th and final wave. But looking at it from a bigger picture perspective and going back to that a very strong bull run the stock had between April 2020 and January 2022, what is key for me is this sell-off that we're seeing should hold above 51.41. So I'll be looking at this key level to maintain the bullish outlook. But I think when you look at it from this corrective structure, it does look to be very close to its end, though at current levels, there's no signs of a reversal yet. And I must say, when it comes to Barloworld, really from a fundamental perspective, I think about last month, they released an operational update for the last 4 months of this current financial year. And besides the slowdown in equipment demand from the South African mining industry, all the other operations in other geographies, including Russia, have been doing fairly well. I think revenue was down only 2%. So it's been very robust and resilient, and they've got very good cash flows and a very, very solid balance sheet. So in terms of the fundamental outlook, I think once we see an improvement from the South African operations, that will bode well for the stock as well. So from a technical perspective, I'm more positive than I was last year. As I said again, the trend does seem to be closer to its termination point. Close to the bottom than it was last year. So I'll be looking at that 51.41 level, and hopefully we'll see some improvement in the local operations, which will boost the financial statements as well. So yeah.
Well, talking about improvements, British American Tobacco has seen improvements in its profits for its new generation products. So of course that is the vapes that are outside of the traditional tobacco business, and even reaching targets sooner than they had anticipated. So assuming that that's going well, but I mean, British American Tobacco is also just seen as I don't know, an ex-growth company, because also of even these rules that we're also seeing, firstly, US consumer is under strain, but also now, even with the new generation things, in the UK, there are also some regulations that are coming through that are trying to limit that. What are you seeing there in terms of British American Tobacco?
Yeah, so interesting that you mentioned that, because I think all of that is pretty much reflected in the charts as well. So I've actually abandoned every Elliott wave count I had for British American Tobacco, because every time I do an update, it just invalidates it. I'm like, you know what, let me take a step back and look at the bigger picture. So just as a reminder, this stock made an all-time high back in July of 2016, had this very strong sell-off to January 2019, and within 2019 still had these two bottoms, or this one was in March 2020, and then we've had these two bottoms here as well. So what I have here is a very, very strong support zone between 507 and 491 rands per share. And we have a very, very strong resistance zone at around 731 rands per share. So you can see that the stock between 2019 to date has been trading in this very, very clear range. So I'm basically looking at or this stock as a range trading strategy. So the most ideal level for me to buy would be at this support zone. So looking at this decline from December 2022, we can see a very, very strong bear trend, which is characterized by this sequence of lower lows and lower highs, which is still intact. So I'm still forecasting potential for more downside in this stock. And for me, like I say, the most ideal buying zone is at this support level here. But if we do see the stock push up and break above 609 Rand per share, then it could potentially be a signal that this downtrend has now turned to a potential uptrend, as we will break, or the stock will break above this previous lower high, forming a new higher high. So I'm very, very neutral when it comes to this stock. There's no significant evidence yet that the downtrend has come to an end. And like I say, from a technical perspective, this is what I would call a high value area to buy. So that is always going to be the trade-off between buying now and trying to time it and hoping that the stock does continue to sell off to this support zone. And again, just touching on what you said, when I look at the latest annual results which were published, again, to emphasize what you said, even with the new generation products, they don't seem to be yielding much in terms of revenue. And like you say, it's an ex-growth story. Even with the new generation products, I think their forecast or outlook for the next year or two, even though the new generation products have hit profitability 2 years in advance, they are still forecasting low single-digit organic growth. So from a fundamental perspective, I don't think there's anything really to shoot the lights out. And hence, I'm looking at this range-based trading strategy going forward. So nothing really exciting for me. It's more about trying to get the timing right and buying at support and selling at resistance. But from a fundamental perspective, nothing really exciting for me when it comes to British American Tobacco.
Yeah, it's going to be quite interesting to see, I mean, what investors cling to there and how much upside we could get if there is much. Let's go into Glencore, the commodities counter that you've chosen for today, and actually quite interesting that that was the second biggest underperformer compared to the broader market. Just take us through that chart. I feel like it's going to be quite messy.
Not so much,
not
actually.
So much.
So let's recap last year when we did the recaps. I actually took possible counts for Glencore. The first one was looking at this rally from March 2020 to this peak at 124.33 as the complete 5-wave advance, and I was looking at a potential ABC zigzag correction, and I had an alternative count which implied that this sideways movement was part of a larger triangle for wave 4, and I had an invalidation level at 92.30, which would then, if price broke below, it would favor the first outlook. And actually what we did see about 2 weeks ago was price did break below this level of wave A, which then confirms that this advance from March 2020 to this peak is the full 5-wave advance, and where the stock is now is in a correction which I'm labeling as a zigzag ABC, which is contained within this descending channel. So from a support perspective, I'm forecasting more sell-off and hopefully finding support at the lower end of this channel before seeing a resumption of the uptrend. And I think when you look at it from this technical perspective, this correction hasn't been deep, it hasn't been aggressive, so it's been pretty
as you would expect
resilient,
from a commodity counter. I mean, we've seen all the other ones.
Yeah, and I think what works in Glencore's favor is its diversification across the commodity space. I mean, they do cobalt, copper, zinc, and all sorts of other things like ferrochrome, a bit of gold, coal. And when you look at the latest annual results as well as the production for the 2023 financial year, it was a year characterized by very, very low commodity and energy prices. And also they have a very big role that they're playing in terms of the energy transition. So they're still catering for the energy needs of today, but they're also building scale capacity for the future energy needs as well as decarbonization as well. So they're very, very well positioned in the market from a diversified business portfolio perspective. And I think this correction that we're seeing after this very, very strong almost 3-year bear market, really it's been long overdue. And like I say, it hasn't been a deep and aggressive pullback, and that shows the underlying strength of the company still. So I think if we can get the share price just to push down a bit lower, maybe around 76 Rand a share, that could provide a very good buying opportunity. But I think in the long term, again, Glencore, one of the most diversified, well-run commodity stocks or companies in the world. So I think this will provide very, very good buying opportunity. Yeah, indeed. No wonder a lot of the analysts that I speak to actually choose Glencore as their stock pick. Also quite interesting what they're planning to do with their coal business now with the coal interests of Teck Resources there in Canada. Mondi, it's going to paper. What are you seeing there? And I do know that you also bring in some insight on, some arbitrage opportunities when looking at dual-listed shares. Show us that picture. Yeah, so Mondi, very interesting one. And like I say, since I started here on Trade of the Week, I've always had a bearish outlook on Mondi. And for the first time now, I'm going to have a bullish one. So the last time we touched on Mondi was around October last year. And I was still looking at this bear trend from August 2021 as a 5-wave decline. And I'd already labeled this as wave 1, 2, 3. And this sideways move, I had labeled it as a barrier triangle for wave 4. And I was forecasting a final push down to around 230 per share to complete wave 5 of wave C. And something very interesting that I noticed actually when I was doing my research over the weekend, which for me was a very, very massive learning curve actually, is whenever I've looked at Mondi, I've never looked at it from the dual listing perspective. I've never looked at how the share has been trading in other exchanges, and its primary listing is actually on the London Stock Exchange, which I have here. And what actually happened from the local counter is in October last year, the stock had this very, very strong advance, which broke above this resistance line, therefore invalidating this wave 4 outlook, and we did not get that sell-off for wave 5, which I was looking for.
Okay.
But interestingly enough, when I looked at it from the London Stock Exchange perspective, and we can see here the very strong correlation between the two counters. We have wave 1, wave 2, wave 3, similar to this wave 1, wave 2, wave 3. And whereas we had a sideways consolidation here for wave 4, which was a barrier triangle, what we got in London was actually a contracting triangle. So we got triangles in both exchanges, but different types of triangles. And that wave 5 I was always looking for actually happened on the London Stock Exchange, but didn't happen on the JSE. So this...
So you were looking at the wrong exchange?
I was looking at the wrong exchange, basically. If I had been looking at the London Stock Exchange and seen this sell-off, it would have been an early trigger that due to whatever disconnect that there was between the two exchanges, but the 5-wave sequence I was looking for actually happened in London. So where the opportunity comes in here, especially for hedge fund managers, this is mainly a hedge fund strategy, which is arbitrage. Now, what arbitrage means is when you have a counter like Mondi listed on multiple exchanges, in a perfect world where the markets are efficient, there'll be very close similarities in terms of performance between the JSE and the London Stock Exchange, but the reality of it is that's not always the case. So whenever you have this break in that similarity or high correlation, it creates what's known as an arbitrage opportunity, where you can buy on the JSE, the same counter, and simultaneously sell it on the London Stock Exchange. But it really requires one to have very, very strong computational ability, as those arbitrage opportunities can only be exploited in very short trading periods. So it's mainly done via high frequency trading, quantitative trades, very, very difficult to execute manually. So this is actually the opportunity that presented itself at this time, but because I was only looking at it from the JSE perspective, I then missed from the London Stock Exchange. And I think again...
So would this be like a buy low, sell high situation based on, you know, the different prices on the different stock exchanges?
Yes. Yeah, pretty much.
Okay.
Pretty much, yeah, in summary. So looking at Mondi from its primary listing on the London Stock Exchange, a bottom looks to be in, which was last year, June 2023. So again, successful exit from Russia. They are very conscious of the fact that they haven't grown revenues in a long time, which I've always bemoaned, that there has been no growth. And also when you look at the results for the last financial year, big declines in both revenue, EBITDA, and net profit. But I haven't actually taken a deep dive to see what they refer to as new initiatives to grow their top line as well as to grow their profits and margins. But I think with the exit from Russia, using those proceeds to also deleverage the balance sheet by paying off significant amount of the debt, and looking at it from a technical perspective, and finally having the bottom I've been looking for, even though I picked it up on the London Stock Exchange, I think for the first time I can say that I'm bullish on the prospects of Mondi going forward, especially if they can improve those revenues and really start bringing more growth, both in terms of revenue and net profits. But from a technical perspective, I'm very bullish on Mondi going forward.
All right. Well, thank you so much for your time and for your insights today, Loyiso. Really appreciate it. That was Unum Capital's Loyiso Mpeta with this week's Trade of the Week.